Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business so you don't have to. Today, we're diving into the annual report of Park-Ohio Industries, a company that, let's just say, has its fingers in a lot of pies from supply chain management to heavy-duty equipment and more. It's a complex machine, and this report is our chance to see how well it's running, but are we going to find treasure or just a lot of nuts and bolts that don't quite fit together? Hold on tight because the headline is this. Park, Ohio, while managing to stay afloat, showed a mixed performance, a balancing act between strategic sales, dips in key sectors, and some cost-cutting magic. It's like watching a seasoned juggler trying to keep all the balls in the air, but you're not quite sure if they'll make it to the end of the act. Let's get into the details, using easy English, to figure out if Park, Ohio has a long run ahead or if it needs to rethink its strategy. First up is Supply Technologies, Park Ohio's segment that's all about managing the supply chain for other companies. Think of it as being the stage manager for a huge manufacturing production, making sure everyone gets their materials on time. This part of the business reported $775.8 million in sales for the year. They're not just moving boxes, they also engineer and manufacture specialty fasteners, crucial for industries where things can't shake loose, like automotive and aerospace. So how have they done? Turns out the revenue went up a bit, like a flower barely stretching to reach the sunlight, about 1.6%. But the real story is how their profit margins improved, which means they're making more money per sale. This boost, they said, was mainly because of better sales in things like aerospace and defense, and some cost cutting they were working on. This segment is chugging along, improving how efficiently it operates, which is a good thing. Next, we look at assembly components, focused on making parts that help vehicles be more efficient and less polluting. These are the guys making fuel rails and pipes. This segment reported about $398.7 million in sales. Think fuel rails that keep fuel flowing smoothly in your engine. However, things weren't all that great. Sales actually took a hit, down almost 7% compared to the previous year. This is because the company had to lower prices on some older products, and demand in certain programs fell off a cliff as they neared the end of their product lifecycle. What's promising, however, is their profit enhancement initiatives. It's like performing surgery, making sure they can still make a profit even when sales numbers aren't ideal. Engineered products comes next. These guys do it all from heating and melting systems to forging and machining metal. You can think of them like a workshop. This segment reported about $481.7 million in sales. Sales for this section were up, which indicates there are more people buying their machinery or equipment. The company made money from new capital equipment and aftermarket sales in capital equipment. However, not everything is perfect. The company pointed out increased operating costs negatively impacted them, signaling that while sales were up, the cost of doing business also went up, cutting into potential profits. Now let's check out some risks that Park Ohio themselves admit could throw a wrench into their plans. They depend heavily on the automotive and heavy-duty truck industries, so any downturn there could hurt them badly. Losing a major customer could be a big blow. One risk they can't avoid, apparently, is the labor force. They also said labor shortages are a persistent issue, a challenge that can lead to higher costs and plants not running smoothly. And let's not forget the ever-present threat of cyber attacks. Any successful breach could cost a fortune to fix. To help manage such cyber risks, they have some safety procedures which include security monitoring and simulated cyber attacks. The goal is to prevent cyber breaches, with the VP of Information Technology keeping a close watch with 30 years of global IT experience. Management briefs the board at least once a year on these cybersecurity programs. Another risk is product liability. What if something they sell causes harm? Even with insurance, a major claim could be a big setback. And of course, they have to deal with environmental and safety laws. Staying compliant, though essential, can be pricey. They also deal with international political risks because they have operations all over the world. Let's talk about that senior management. There is a section dedicated to talking about cybersecurity risks and their management, specifically mentioning the VP of Information Technology. The Vice President of Technology oversees a cybersecurity team that includes experienced cybersecurity professionals. To make sure key business is not interrupted, a potential risk is them leaving. If those key figures were to leave, or, and I quote, if neither Mr. Matthew Crawford nor Mr. Edward Crawford holds the office of Chairman, Chief Executive Officer, or President, the company loses some borrowing power. Alright, time to talk numbers. One important figure is revenue, but let's talk net income, shall we? The company had $42.5 million in income from continuing operations attributable to Park-Ohio common shareholder. They want to compare this to previous years, $33.4 million and $10.8 million. Not bad, but it is worth noting that this doesn't account for the loss from discontinued operations. I'm going to go to our team and see what they think about this number. It's important to know about the debt that they have. As of December 31, 2024, that debt was $618.3 million. This isn't necessarily a red flag, but it is important to keep in mind because debt needs to be paid back and it can restrict the company's flexibility. Another item to watch is goodwill. Goodwill is the value that is left over when you buy a business after subtracting all of the stuff it owns and owes. Think of it as the value of reputation, client lists, and things you cannot touch, such as intellectual property and brands. It is currently over $100 million. Goodwill technically represents optimism. It is only if the value of those acquisitions fails to pay off that the value gets written off. So what's the big picture with Park-Ohio? The company has significant strengths, like its ability to adapt and its supply chain technologies. However, labor shortage could affect sales as well as global conflicts disrupting business partners. Plus, those ever-present cybersecurity threats, international political risks, and dependence on specific industries add layers of complexity and potential volatility. The company also stated they are exploring acquisitions, which may or may not add value to the overall business. Overall, Park-Ohio seems to be in a period of cautious navigation. They're actively managing costs and seeking growth, but face a multitude of external risks that could easily upset their plans. It's a company to watch closely, especially to see how they navigate these economic uncertainties and manage their debt while adapting to ever-changing markets. Thanks for watching this episode of Corporate Decoder. If you enjoyed this deep dive, don't forget to hit that like button, subscribe for more, and let me know in the comments which company we should decode next.